Welcome to This Explainer. Today, we're acting as your impartial financial analyst to decode the absolutely massive projections behind the recent market surge for HIMSS. Now, if you've been keeping an eye on the markets lately, you know it's been pretty turbulent out there. But amidst all that chop, one stock just caught a massive updraft that has both Wall Street and retail traders completely buzzing. We're going to break down the specific growth strategy of Hims & Hers Health, zeroing in on a bold new forecast that points to a game-changing new revenue stream on the horizon. Let's get right into it.
$19 billion. That staggering figure is the potential annual revenue some investors are actually projecting for HIMSS by the year 2030. And it's exactly this projection that drove their best market day in 2 whole months. I mean, just think about that number for a second. To put it into perspective for a retail investor, $19 billion is roughly the equivalent of the entire annual GDP of some small countries. It's a massive, massive projection. So to figure out if it's actually grounded in reality, we need to pop the hood and look at exactly how analysts are doing the math here.
So here's our roadmap for today's explainer. First, we'll look at why HIMSS stock surged. Second, we'll dive into the massive peptide market. Third, we'll calculate those HIMSS revenue projections. Fourth, we'll navigate the FDA regulatory tailwinds. Fifth, we'll cover their strategic acquisitions and expansion. And finally, we'll look at why retail sentiment just turned so bullish.
All right, let's kick things off with Section 1. Why HIMSS stock surged.
Okay, so while we just saw a massive 12% daily spike fueled by all this peptide optimism, closing right at $30.17, we have to remember that the stock is actually down 46% over the past year. As a retail investor, it's kind of like finding a crisp $100 bill in your winter coat. I mean, sure, it's a fantastic day, but it doesn't totally erase the fact that your portfolio might have taken a pretty serious beating over the last few seasons. Context is absolutely everything here, right? The market is currently weighing these historical struggles against this massive future potential.
Adding some serious fuel to this recent momentum, the financial firm Canaccord Genuity's released a highly circulated note. They're calling peptides a potential long-term growth driver, and they maintained a $32 price target. Basically, that implies about a 6% upside from its current jumping-off point. So what does this actually mean? Well, Wall Street is essentially signaling that this recent pop isn't just a random flash in the pan. It's tied to a very real fundamental shift in the company's underlying product strategy.
Which brings us to Section 2, the massive peptide market.
You see, beyond basic telehealth, peptides represent a whole new frontier for preventive care and longevity. And that is exactly why analysts are forecasting such massive demand. We aren't just talking about treating a sudden illness anymore, like you traditionally expect. No, this is a massive pivot toward continuous wellness and longevity. And in financial terms, this is incredibly lucrative. It shifts the entire business model from one-off, transactional healthcare to a sticky, recurring subscription model where consumers are continuously investing in their long-term health.
Now, the really crucial point is right here in these numbers estimated by First Wave Fund CEO Jonah Lupton. He's showing a combined global peptide market that could easily reach up to $380 billion by 2030. Let's break that down. You've got the famous GLP peptides, those are the ones largely known for weight loss and metabolic health, projected to hit up to $300 billion all on their own. Then you tack on the non-GLP peptides, and that adds another $50 to $80 billion on top. Guys, this is the absolute definition of a mega market.
There's this great anecdotal quote from Lupton that perfectly captures the growing consumer awareness right now. He's pointing to a massive, untapped market of future users who are currently just in the research phase. He talks about chatting with friends in Boston who are all constantly talking about peptides, even if they aren't actually using them yet. As an investor, you absolutely love to see this phase. It's that magic moment just before mass adoption. It's the equivalent of everyone talking about streaming services right before they actually cut their cable cords. That latent demand is sitting right there, just waiting for the right platform to make access easy, affordable, and safe.
All right, let's move on to Section 3, calculating HIMSS revenue projections.
Here's the beautiful thing. HIMSS doesn't need to dominate the world. They just need to carve out a highly conservative 4 to 5% slice of that massive global pie. For a retail investor trying to analyze a growth stock, this is a vital concept to grasp. Think of it like a massive gold rush. You don't need to find every single ounce of gold in the world to become incredibly wealthy, right? You just need to set up a highly efficient, trusted mining operation in one small, rich valley. HIMSS isn't trying to be the only player in the game. They are just trying to be the most accessible, most reliable platform for literally 1 out of every 20 customers.
So, if they capture just that tiny 5% sliver of the market, Lupton estimates that HIMSS peptide-related revenue alone could hit anywhere between $10 and $19 billion annually by 2030. And remember, that is just from peptides.
That's not even counting their core telehealth services for things like hair loss, dermatology, or mental health. This right here is exactly why the bulls are getting so aggressive. The leverage you get from capturing even a minority market share in a macro trend this large, it's absolutely astronomical.
Next up, Section 4, Navigating FDA Regulatory Tailwinds.
Okay, so while the FDA did restrict certain peptides back in 2023, Canaccord Genuity points out that the ongoing FDA review could actually be a major catalyst for HIMSS moving forward. I know, government reviews often sound like a bad thing on the surface, but in financial terms, regulatory clarity is actually a fantastic filter. Think of it like setting up a toll booth on a busy highway. It stops all those shady, unregulated sellers operating on the dirt paths, and it forces all that consumer traffic onto the safe, paved, regulated highway. If HIMSS owns the highway, they benefit directly from those strict rules.
To look at this impartially, we have this viewpoint from Health and Human Services Secretary Robert F. Kennedy Jr., highlighting the argument that stricter rules will actually benefit established, vertically integrated platforms over the sketchy, unregulated sellers out there. And look, regardless of your personal political stance, the financial takeaway from these regulatory bodies is incredibly clear. They want patients moving away from gray market, unverified sources and safely into transparent, highly monitored healthcare systems. Obviously, this plays right into the hands of a publicly traded company like HIMSS that is heavily investing in compliance and infrastructure. Let's transition to Section 5, Strategic Acquisitions and Expansion.
To support all these future products in metabolic health and recovery science, HIMSS has executed a very clear two-step expansion strategy to completely own their supply chain and grow their global footprint. Step 1, they bought a California-based peptide manufacturing facility. Step 2, they acquired the international digital health platform Eucalyptus. For a retail investor analyzing this strategy, it's the exact equivalent of a popular local restaurant chain buying its own commercial farm to ensure food quality, and then turning around and immediately opening up franchise locations across the ocean. They're securing their supply at home while simultaneously securing their demand abroad.
So the crucial takeaway here is that they aren't just selling a product anymore. They are building a comprehensive, multinational ecosystem. We're talking in-house lab testing across 4 major global markets: the US, the UK, Canada, and Australia. This is what we call vertical integration. By owning the manufacturing, the lab testing, and the consumer-facing app across all these regions, they capture margins at every single step of the process. They aren't just playing the middleman. They're the factory, the doctor's office, and the pharmacy, all seamlessly rolled into one digital interface.
And that leads us perfectly into our final section, Section 6. Retail sentiment turns bullish.
Over on StockTwits, the retail sentiment for HIMS suddenly flipped from neutral to completely bullish. And this was accompanied by a staggering 2,081% surge in message volume within just 24 hours. I mean, that is an absolute explosion of retail interest. When message volume spikes like this, it tells us something very important. The narrative has officially broken out of the dry institutional reports and has totally captured the imagination of the everyday retail crowd. This level of optimism is echoing across retail trading boards everywhere right now. Users are actively betting on the global expansion of this entirely new medical category. It really reflects a strong belief that we are just standing at the starting line of the peptide revolution. Retail traders are looking at those international acquisitions, they're looking at the manufacturing investments we just talked about, and they are fully buying into the idea that HIMSS is setting the stage for a solid decade of compounded growth.
Which leaves us with the ultimate question you need to ask yourself before even thinking about investing. Can HIMSS successfully capture their 5% slice of the pie? Or will unresolved margin questions and regulatory hurdles keep this $19 billion dream grounded? They've definitely built the infrastructure and the market is for sure expanding, but execution over these next 6 years, that's going to be everything.